Sezzle is a stock you've probably never heard of, and in this video I'll be talking about why I think this stock could 10x over the next 10 years. And we'll be talking about what the company does, their financials, and finally we'll be talking about their valuation. So we started buying Sezzle in February 28th. I think that was the very first purchase I made. So it was trading at around $50 a share. And then we kept buying the dip all the way down. We made a few purchases and I ended up with an average price of around $45 a share. We rode the stock all the way up to highs of $180, and we took profits multiple times on the company because I did believe that, past $140 it was overvalued. So we sold a bunch here at the top, and now it's almost been cut in half ever since those highs. And most recently I bought the dip at $100 a share, and right now it's trading even lower than when I bought the dip. So here's why. I think at $95 a share, Sezzle is a good stock to buy, and one of the best, in fact, in my portfolio. So first thing we notice is that it's a $3 billion company, which is relatively small, in comparison to all the other stocks that I have in my portfolio. So just to put that into perspective, one of Sezzle's competitors, one of the biggest ones in the market, is Affirm, and Affirm is a $25 billion company. So it's like almost 10x the size of Sezzle. And the first thing I want to talk about is the BNPL industry and the BNPL market, where it started and where it's growing, where it's not growing, etc. So BNPL kind of took off, surprisingly. Usually innovations and technological innovations, especially in the world of finance, usually they start in the US and then they spread all over. But this was one of the few exceptions where it actually started in Europe. So the pioneer of this industry in the modern era was Klarna, and they're a Swedish company. And obviously, being a Swedish company, they took off in Europe, and that's where they really had a very strong hold or strong market share in Europe, and that's kind of where the BNPL market kind of took off. And then we had Afterpay, which is an Australian company, believe it or not. And so, BNPL really grew in Europe, and then it really grew in Australia, and surprisingly, North America, the States and Canada is the last to kind of get the BNPL bug, let's call it. Okay. And we can see that in this graph here. So we see that in 2020, the share of e-commerce transactions in Europe was using BNPL services was around 7.4%. And now in 2024, it's around 13.6%. So a much larger share of transactions using BNPL is happening in Europe versus in North America, where it was only 1.6. And now it's 4.5. But the very interesting thing you see here is that in North America, it tripled almost from 1.6 to 4.5 in 4 years. That's almost a triple. Whereas in Europe, it was less than a double. And this is exactly why I want to invest in a company that is growing in the US, like a US company that is focused on the US and Canada, I guess. But, the main focus is US because it's such a larger market than Canada. And Sezzle is an American company, right? And that's where they're focused on. And they even talk about it here. They talk about Germany, Australia, and then in Germany, 20%, Australia, 15%. Whereas in the States, the market penetration for BNPL is only 6%. And the good news is that it's growing much faster, right? It's tripled in the last 4 years alone. So this is very good news for investors in the US market looking for BNPL companies. And then we'll slowly talk about why I choose Sezzle over other competitors like Affirm, for example. Okay. Another thing I want to point out is that BNPL users are typically the younger generation. So we see a lot of people aged 25 to 33. They're really the ones that are using Sezzle, that are using BNPL the most. Even people 34 to 40, they're using it a lot too. And obviously the younger generation, once they start getting some money, that's probably when they'll start using it. And this is something you like to see, right? You don't want your investment product to be a product that's being used by the older people only, right? Because then, they're going to die soon, right? You want it to be used by the younger generation because, over the next 30, 40 years, that's where you'll see a lot of growth. Because these people who are 18, 20, 25, 30, 35, 40, they're going to be using BNPL for the next 30 years because they grew up using it, right? And it's kind of like how credit cards it took off, like 40, 50, 60 years ago or whenever. I don't really know exactly when credit cards started taking off, but it's the same exact idea. You want the younger generation to be using the product you're investing in because they're going to be using it for the next 40, 50 years. And the reason why a lot of people do use BNPL is, first of all, people are kind of very slowly moving away from the credit card business model. We're seeing this especially in Europe, and it's slowly slowly but surely happening in the United States. We see here that 50 million Americans are unscorable or are credit invisible. That means they don't have a credit card or they just cannot be scored, right? So you can't really do a credit check on them. So all these 50 million people, they don't have access to credit card. And 48% of them have been rejected at least once when applying to credit products. So one part of it is people getting rejected from credit cards, but another part of it is people who just don't want to use credit cards anymore. Like people are like it says here, younger generations are just like, they're just done with credit cards. They think the credit score system is rigged, and they want something new. And that's what BNPL offers. Okay, and we see this report, I think this is by Grand View Research. They're expecting the BNPL market in the States to grow at 24% a year, which is insane. Like, that's literally one of the fastest growing industries. And I can definitely see this happening because we saw this growth in Europe, and we're already seeing this growth here in the States. Even though it's such a small, tiny share of e-commerce transactions, it's tripled in the last 40 years. And now let me just kind of explain how the typical BNPL market works. Like how all these other companies like Afterpay, Klarna, Affirm, all of them, how they make their money. And then we'll talk about how Sezzle make their money, because Sezzle is doing something completely different. And it's exactly why I like this company. So typically, let's say you're a customer and you wanna buy a product from Nike, let's say a pair of shoes from Nike. Let's say you're shopping online for the sake of this example. So you'll place an order with Nike, and let's say Nike has a partnership with Affirm, right? So, Nike's in bed with Affirm. So the only way you get BNPL on Nike is by using Affirm. So let's say you're a customer and you use Affirm. You go on the Nike website, you place an order for a pair of shoes that, let's say they're $100 shoes. You place the order and then they ship the order to you and you don't pay a single dollar, right? So when you place that order, it's actually Affirm, which is the buy now, pay later provider. They're the ones who pay the merchant the $100. So the merchant gets their money, but not from you. They get it from the BNPL provider. And then what you do is over time, you pay the $100 back to BNPL in installments. And you don't pay any interest, unlike a credit card. So it's very similar to how a credit card works, but the difference is you're not paying any interest at all. But the way the BNPL provider, like Affirm in this case, is making money is by charging the merchant, which is Nike, like a 5% fee. And the reason why Nike is down to pay this 5% is because Affirm is bringing them a lot of business. Because many people would not buy these Nike shoes if they couldn't BNPL the purchase, because let's say they don't have the money or they just don't want to spend $100 now. So the reason, just to recap, the reason this merchant like Nike is willing to pay 5% to Affirm is because it brings them more business. And this is obviously like a great deal for the customer because he's not paying anything extra, right? He's literally getting to use buy now, pay later completely for free. So this is why this is such a good business model for the customer, but it's not great for the BNPL provider, as we'll see later. Like we'll see that companies like Affirm, Klarna, Afterpay, they're all not even profitable yet. And their operating margins are shit, right? Because the only way they make money is through merchant fees, which is around 5% of every purchase. And then, a bit of their money comes from late fees and stuff, but that's such a small part of their business model. And now we'll talk about how Sezzle is different. So Sezzle has 3 different transaction types and 3 different ways in which they make money. So the first way is Sezzle Merchant. And this is basically exactly how what I just explained. Like this, it works exactly how Affirm, Klarna, and Afterpay, how they work. So any company, like let's say Walmart, that's in bed with Sezzle, it works the same exact way. So they have the same exact margins as other companies like Klarna, Afterpay, etc. So nothing special here. Sezzle Merchant is nothing special at all. Now, what is special is Sezzle Anywhere. This is kind of something that only Sezzle is offering, and only Sezzle is offering very successfully. So what this is you download the app, and once you download the app, they give you a virtual Visa card that's offered by Sezzle. So it's a Visa card that is also like, it's a partnership between Sezzle and Visa, and you get this virtual card. And the advantages of this is that you can use this card anywhere. It doesn't have to be, unlike Sezzle Merchant and unlike Affirm and Afterpay, it doesn't have like the Sezzle doesn't have to be in bed with the merchant. It can be literally any store, anywhere in which Visa is offered, which is like literally everywhere in the world Visa is offered. So any place, any store that Visa is offered, you can use Sezzle Anywhere. You can use this virtual card completely for free, and you can buy now, pay later using that. So again, this is anywhere Visa is accepted, you can use this, and it's completely for free. It's free, but with a caveat. So when you first download the app and you first get the virtual card, every time you make a transaction, they charge you like $1, which is, it's a fixed fee. It's not a percentage. It's It's just a fixed service fee. For being able to use Sezzle anywhere, they charge you just $1 because they're not making any merchant fees on this. Because again, remember, this works anywhere. They don't have to be in bed with the merchant, so they don't make any money from the merchants. So when you're new and you download the app and you get the virtual card, the Sezzle is charging you a service fee every time you're using, Sezzle anywhere. And they keep charging you that $1 until you use it long enough for them to trust that you're going to pay back in time. So once you've proved to Sezzle that, you're a good customer, you're paying back on time, they stop charging you any service fees at all. So you literally get to use Sezzle anywhere completely for free. Just like how Affirm and Klarna, you get to use them completely for free. But those ones, you only get to use them with merchants that they're in bed with. The good thing here is that Sezzle, you can literally use it anywhere where Visa is accepted, which is anywhere around the world. So this is really what makes Sezzle super special. Now, the downside for Sezzle and Sezzle investors is that this is super low margin because the only way that you make money is through those service fees, which is, not a lot. And then once the customer proves themselves that they're a good customer, they don't even charge service fees anymore. So that literally the only way they make money at that point is through interchange fees. I'll explain interchange fees very, very briefly. So you know how, let's say you bank with JP Morgan and they issue you a debit card. Every time you use that debit card, JP Morgan gets a percentage of that transaction. So they get like 1 or 2% of that transaction from the merchant. So, but in this case, Sezzle is the one offering you that debit card. So, there is no JP Morgan, Sezzle gets that 2%. So if that was complex, you don't really need to understand that. You just need to understand that it's much less than the 5% that they get when it's a Sezzle merchant purchase. When it's a Sezzle anywhere purchase, they only get an interchange fee, which is usually 1.5%. So it's a much lower margin business than Sezzle merchant. And now you might be asking why do you like it so much? Well, first of all, like I said, it's very good for the customers and it gets people to use their products because as opposed to all the other competitors that can only be used with merchants that are in bed with those companies, you can literally use this anywhere in the world. And this is literally their bread and butter. Even though it's low margin, it gets people to start using the Sezzle platform. And we'll look at their growth. And this is why Sezzle has insane growth. It's because of this product right here. And then finally, the most important part, the second most important part of the business, I guess, after Sezzle Anywhere is Sezzle Premium. So once you're a Sezzle Anywhere customer and you start using Sezzle Anywhere literally everywhere you shop, you start using it at Starbucks, you start using it at Nike, you start using it literally to do all your purchases, you're going to find out very quickly that Sezzle Premium is a no-brainer for you. Because Sezzle Premium is a $12, $13 subscription per month. And what happens when you get Sezzle Premium is you start getting exclusive discounts, you start getting gift cards, and you get 2 free reschedules, so 2 times where you don't have to pay back on time. And you get up to 4% cash back on 350 brands. So you start getting all these perks like gift cards, discounts, and cashback. Is very similar to how a credit card gives you reward points when you get Sezzle Premium. So it's $13 a month, and you'll start to notice that very quickly, if you're using Sezzle a lot, it's super worth it because all you need is one gift card, one Nike gift card that gives you a 10% off on shoes that's $140. There's your $12 back or your $13 subscription back. So I hope that makes sense. So just to kind of recap how it works is if you're a user that uses Sezzle Anywhere a lot, very often, Sezzle Premium becomes a no-brainer. So the business model for Sezzle works like this. They want people to get on Sezzle Anywhere, even though it's a super low margin business, to eventually subscribe to Sezzle Premium. And this is where Sezzle starts making a lot of money. Because as you know, subscription models are the best, right? Because the revenue is recurring, it's stable, it's consistent. You can predict it going out because these people are going to pay you a monthly fee no matter what happens with the business. And you'll find that throughout my portfolio, this is a common theme. Something like Amazon with Amazon Prime, I love that about Amazon. Something like SoFi, where a lot of it is subscription based, I love that. Hims, same thing. Hims and Hers is the same thing. So you'll find that this theme is common throughout my portfolio. I love subscription based models. Again, for the reasons I just mentioned, revenue is predictable, it's consistent, and it's stable. So here, this is what makes Sezzle different. It's the Sezzle Anywhere service, which lets you use buy now, pay later anywhere. Literally anywhere Visa is accepted. And then once you use that a lot, you'll find out that Sezzle Premium is a no-brainer. Now let's move on to this. This is called the Rule of 40. If you guys don't know what this is, this adds up your revenue growth and your operating margin and scores you. So Palantir is famous for being one of the highest companies on the Rule of 40 frontier, and they're at 94%. But something people don't talk about is that Sezzle is at 115%, which is absolutely insane. And we'll look at why. It's because, first of all, they're the most profitable buy now, pay later provider by far, like by a mile, and they're seeing like 60-70% growth. So that's why they score such a high, so high on the Rule of 40 frontier. Now let's move on to their subscriber growth. So monthly on-demand and subscriber growth. So they kind of combine paid subscriber versus just users that are unpaid. Remember how I said when you first start using Sezzle anywhere, they charge you a service fee. So they kind of combined paid users and unpaid users into one metric, which I don't love, but it still shows you that they've grown almost 40% year over year. They've grown users by almost 40% year over year in the most recent quarter, which is that's an insane growth. Not many companies, no companies in the buy now, pay later space at all are growing at 40%. So this is another reason why I love this company. Next thing we'll talk about is what happened in the most recent quarter and why the company sold off so much. So even though if we look at their trailing 12 months revenue, we'll see that they did 93% revenue growth in the most recent 12 months, which is this is insane. This is insane growth. But the reason why people didn't like the report so much is because, quarterly revenue didn't grow as much. So when you compare June 2025 with June 2024, so like Q2 2025 to Q2 2024, the growth wasn't as fast as Q1 2025 versus Q1 2024. So I hope that makes sense. And a big reason for this was that Q2 of 2024 was a big quarter. So they're going up against very tough comparables, and that's why the revenue didn't grow as fast, even though revenue growth was still at 76%. And we'll kind of look at what they're expecting for the rest of the year so we can finally get to the valuation part of the thesis. So for in 2024, they did 70% revenue growth for the fiscal year. And in 2025, they're expecting 60 to 65% revenue growth. So they're still expecting super solid growth, 60 to 65. I mean, you don't see that every day. That's faster than a company like Palantir, for example, right? And they're expecting $3.25 of EPS. So if we divide $90 a share, by the 3.25 of EPS they're expecting to do in 2025, we get, it's $95 a share. That's how much they're trading at right now, divided by 3.25. We get 29 times. So this is their PE ratio. They're trading at 29 times PE ratio, and they're growing revenue at 60%. Think about how insane that is. Find any company in the world, any stock in the world that's growing at 60%, and then tell me how much their PE is. Even that's if they have a PE, because most of these companies that are growing at 60-65%, they're not profitable. But Sezzle, you're getting a profitable company growing at 60-65%. Now, I do expect growth to slow down. In 2026, I do expect growth to slow down, maybe towards 40%. But even if they grow at 30%, which I think they're going to do more than 30%, but even if they grow at 30%, it's still a good deal paying 29 times earning for a company growing at 30%. And again, I expect them to grow even faster than 30%. So I'm not going to run a valuation model because I just think this is such a no-brainer. I mean, a company trading at 30 times earnings in a fast-growing industry, they're already profitable. And again, they're growing at 60-65% in 2025, right? So I don't know. I mean, to me, this is the most no-brainer stock at these prices in my portfolio. The business model is very easy to understand. They're in a fast-growing industry. They have this is what we call a major trend. Buy now, pay later is a major trend. It's not like a temporary 2-3 year trend. This is a cyclical 10-year trend where we're going to see massive growth in this industry over the next 10 years. So I hope you guys enjoyed that. And I hope you guys understood why this is one of my favorite companies. And even though you listen to this video and you find out that I'm so bullish on this company, yet it still only makes up around 6 or 7% of my portfolio. That's because I don't want to, even though I'm so bullish and I have so much high conviction in this company, it's still a small company that's relatively unproven. So I don't want you guys to go all in or have 20% of your portfolio in Sezzle. I mean, you can do that if you want to. Obviously, this is not financial advice, but my opinion is you should size it accordingly because it is still a smaller company. It's still a smaller, unproven company. Okay, so I hope you guys enjoyed that. Please give me feedback. Let me know what you guys think. And if you have any questions about Sezzle, please let me know. Peace.